If you are currently contemplating the purchase of a home in Florida, you must pause and listen carefully, for the information you are about to receive could save you from committing one of the most severe financial mistakes of your life. 10 major, high-profile cities across Florida are now displaying terminal warning signs that the majority of prospective buyers continue to ignore, locked in a damaging belief in perpetual growth. If you proceed to buy in the wrong, overvalued location, you face the near-certain prospect of losing tens, perhaps hundreds, of thousands of dollars when the market inevitably capitulates and shifts in 2026. This is not a matter of fear-mongering. It is a declaration rooted in undeniable financial fact. The toxic combination of exploding insurance costs, relentlessly soaring property taxes, and a catastrophic slowdown in migration is creating the perfect economic storm. Data analysis conclusively shows that several Florida cities are already set on a path toward a significant structural price collapse. For years, Florida operated under the illusion of an economic miracle: sunshine, no state income tax, and accessible homes. That illusion fueled a boom where prices rose unchecked, inventory stayed critically tight, and sellers held absolute power. But that wave has fundamentally broken. Migration numbers are slowing, the insurance crisis is deepening into an existential threat, and families are realizing that Florida's true cost of living is far higher than the sticker price suggests. Homeowners insurance has doubled or even tripled in some areas, and the outright withdrawal of major insurance companies from the state is creating a critical, unsolvable coverage vacuum. When people cannot afford mandatory coverage, they stop buying homes. And that is precisely when market prices fall violently. Add to this the compounding stress of rising property tax assessments, surging homeowners association HOA fees, and escalating flood risks, and the perfect financial storm is confirmed. This 500-word manifesto is a granular breakdown of the 10 specific Florida cities where home prices are expected to crash the hardest in 2026. We provide the real data, the real financial numbers, and the undeniable reasons why these once invincible markets are now dangerously close to collapse. The climate risk catastrophe, coastal cities, and insurance crises. The coastal regions of Florida, whose primary appeal lies in their waterfront location, are now confronting a structural financial deformity. The combination of intense climate risk exposure and regulatory failure has allowed insurance costs to spiral into an unaffordable, unmanageable crisis, destroying the fundamental economics of homeownership. 1. Miami, the luxury bubble's altitude loss. At the apex of this crisis sits Miami, Florida's glittering symbol of global wealth and ambition. For decades, Miami defied all economic gravity. Condos sold before construction finished, and beachfront homes tripled in value. By 2025, that myth is dissolving. Median home prices in Miami have fallen nearly 15% over the past year. Condos that once sold within days are now lingering on the market for months, and the lifeblood of its real estate, international demand, has cooled dramatically. The single largest threat is climate risk, which is actively reshaping Miami's housing market. Rising sea levels, stronger hurricanes, and new flood zone maps are changing how properties are valued. Entire neighborhoods once prized for ocean views are now facing astronomical insurance bills. Some homeowners are now paying more in annual premiums than they are in mortgage payments, and others are losing coverage entirely, forced into costly state-backed insurance programs. Developers are still building, but wealthy investors are shifting attention to less risky global markets. Caught between soaring rents and home prices that remain far beyond their reach, local residents are being aggressively priced out. Miami's over-reliance on speculative buying has left it vulnerable to global shifts in money and confidence. The correction that began quietly in 2024 is now accelerating into 2026. 2. Tampa, the unsustainable affordability gap. Tampa's rise was one of Florida's most impressive housing booms, with prices more than doubling in 5 years. That incredible rise has generated an equally powerful and necessary correction. The median home price now sits above $450,000, while the median household income hovers near $70. This massive, unsustainable affordability gap means families who could once comfortably afford a starter home are now priced out completely. Insurance premiums are a devastating component of this crisis. For some coastal homeowners, annual rates now exceed $20, a figure that has doubled or even tripled since 2020. Property taxes are climbing, reflecting the inflated home values from the boom. Combined, these fixed costs are driving up monthly payments to levels most families simply cannot manage. Investors, once the fuel of Tampa's rapid expansion, are pulling back and selling off their portfolios, flooding the market with inventory and pressuring prices across the metro area. Tampa is not crashing overnight, but it is correcting in real time. By 2026, the market will settle into a new, sobering reality defined by cautious buyers and sellers facing hard truths about genuine affordability. 3. Fort Myers, reeling from natural disaster and cost surge. Fort Myers is still reeling from the devastation left behind by Hurricane Ian. 3 years later, the scars remain, and the financial reconstruction has proven more difficult and expensive than anyone expected. Construction materials are costly, labor shortages persist, and insurance rates have more than doubled. In some flood-prone neighborhoods, homeowners are paying premiums of $10,000 to $20,000 a year, often unable to get coverage at all. Home prices have fallen roughly 15% since their peak, and many homeowners who bought at the height of the market are now struggling to sell without taking massive losses. Buyers are nervous, lenders are cautious, and the once frenzied pace of sales has slowed to a painful crawl. Several major insurers have stopped issuing new policies in the Fort Myers area, leaving residents with limited and prohibitively expensive options. Retirees who once viewed Fort Myers as an affordable coastal haven are now reconsidering. Turned off by rising costs and intractable climate risk, by 2026, Fort Myers may still be rebuilding not just its homes, but the fundamental confidence of its real estate market. 4. Cape Coral, the flood zone financial trap. Cape Coral's biggest selling point, its unique 400-mile maze of scenic canals, has become its greatest financial weakness. This system makes it one of the most flood-prone regions in the entire state. After a string of costly hurricanes and rising sea levels, the insurance crisis has reached its breaking point. Some homeowners are now paying more for insurance than for their mortgage, with $10,000 a year or more in premiums becoming the new normal. Median home prices that peaked at over $400,000 are now falling steadily. The number of homes on the market has more than doubled since last year, and many properties are sitting unsold for months. Even cash buyers are hesitating, uncertain about the long-term risks. Recurring red tide outbreaks have hurt water quality and driven away tourism. Cape Coral's rapid expansion fundamentally outpaced its ability to sustain itself, fueled by cheap money and outside investors. As borrowing costs soar and insurance becomes unaffordable, that speculative bubble is deflating fast. 5. Punta Gorda, risk outweighs reward. Punta Gorda, a picturesque coastal city, is located in one of the most hurricane-prone regions of Florida, meaning its greatest financial burden is its own geography. Insurance costs here have violently exploded. Some homeowners are now paying $15,000 a year or more for coverage, and many insurers have stopped offering new policies entirely. Without affordable insurance, homeownership becomes financially impossible. Retirees on fixed incomes, once the backbone of Punta Gorda's housing market, are beginning to leave for safer and cheaper inland communities. Builders who invested heavily during the post-pandemic boom are scaling back new projects, and vacant lots are becoming more common along the waterfront. When the cost of protecting a home rivals the cost of owning it, confidence disappears. By 2026, unless major reforms take hold, Punta Gorda's housing market could face one of the steepest declines in the state. A city defined by beauty, but irreversibly burdened by risk. 6. Naples, the luxury cost squeeze. Naples, the gold standard of Florida luxury where real estate values once seemed untouchable, is now facing vulnerability. Prices are beginning to slip, down roughly 12% year-over-year. Waterfront estates are lingering on the market with sellers quietly trimming prices by hundreds of thousands of dollars. The real shock is the operational cost of ownership. Insurance premiums in coastal Collier County have more than doubled since 2022, with some policies exceeding $25,000 a year. Rising property taxes, surging maintenance costs, and whole fees are eating into profits for investors and retirees alike. Naples' unstoppable migration wave has cooled. The luxury bubble that defined its rise is deflating, and the question now is how far the correction will go. The interior and East Coast affordability breakdown. The interior and mid-coast markets, whose growth relied on being the affordable alternative to the high-cost metros, are now collapsing because high interest rates and cost inflation have destroyed that core affordability advantage. 7. Jacksonville, the unsustainable momentum. Jacksonville was one of Florida's fastest rising stars, fueled by remote work, affordability, and job growth. Now, that unsustainable momentum is fading. Active listings in Jacksonville have surged more than 80% compared with a year ago. Prices are down roughly 12%, shaking confidence across formerly booming neighborhoods. The central problem lies in affordability. Jacksonville's property taxes have climbed sharply. Insurance premiums have nearly doubled in some zip codes, and wages have not kept pace. Even with a strong employment base, household incomes are being severely outpaced by housing costs. Builders are left with unsold inventory, offering incentives like free upgrades and mortgage buy-downs just to move homes. The city's rapid rise created expectations that simply were not sustainable. Now, with higher costs and declining demand, Jacksonville is facing a reality check that will reshape its market well into 2026. 8. Port St. Lucie, oversupply and eroding value. Port St. Lucie, the quiet success story of Florida's Treasure Coast, is now showing clear signs of oversupply. New construction projects have surged faster than demand, leaving rows of unfinished or unsold homes. Builders are offering deep discounts, free upgrades, and mortgage incentives just to attract buyers. Home prices are already down nearly 10% from last year, and inventory is at its highest point in a decade. Homeowners are getting hit from all sides: rising whole fees, climbing insurance costs, and slowing job growth. Even basic coverage for a modest home can exceed $5,000 or $6,000 a year. Port St. Lucie's affordability edge is eroding fast. If inventory keeps rising and affordability keeps shrinking, this once booming city could see some of the steepest price adjustments on Florida's East Coast. 9. Lakeland, the fading affordability advantage. Lakeland was the middle ground of Central Florida, perfectly positioned and marketed as the affordable alternative. That advantage has now all but disappeared. Home prices in Lakeland have risen more than 50% since 2020, pushing the median value far beyond what most local households can afford. Median income near $65,000 versus typical homes costing over $350,000. At the same time, Lakeland's infrastructure is straining under the weight of growth. Flooding is becoming an unexpected problem, prompting insurance companies to raise premiums across the board. Investors who poured in during the boom years are now pulling out as profit margins vanish, adding more supply to an already saturated market. Lakeland's growth story has turned into a brutal reality check, confirming that even the most promising markets overheat when expansion outpaces income. And infrastructure. 10. Ocala, retirement dream turns nightmare. Ocala, once the hidden gem for retirees and affordable living, is seeing its market balance shift severely. Home prices have slipped nearly 8% from last year, and new subdivisions that once sold out before construction finished are now sitting half empty. The cost of living in Ocala has surged. Retirees on fixed incomes face rising insurance premiums, higher property taxes, and soaring energy bills, many are reconsidering their long-term plans, selling sooner than expected or relocating to cheaper states. The influx of out-of-state buyers that fueled Ocala's boom has faded, leaving behind a surplus of homes and shrinking demand. Ocala is cooling fast, and the affordability advantage that once defined the region has eroded. The systemic crash accelerants. The market collapse across these 10 cities is the result of a profound structural failure, accelerated by the convergence of debt cost, climate risk, and the collapse of the migration narrative. A. The insurance cost implosion ICI. The insurance cost implosion is the primary, non-cyclical driver of this crash. Premiums soaring to $10,000 to $25,000 annually fundamentally destroy affordability, converting manageable mortgages into crippling payments. This is a permanent risk premium that has priced a massive segment of the population out of the market entirely, guaranteeing sustained price depression in exposed regions. B. The affordability disconnect. The affordability disconnect, high price versus low local wage in places like Tampa for $150,000 price versus $7 OK income, ensures that current prices are not supported by the local economy. The collapse of the migration engine means the market must now reset prices to match local wages, guaranteeing deep price cuts. C. Investor retreat and inventory flood. The high penetration of investors is now a vulnerability, as profits are squeezed by high rates and crippling insurance costs. Investors are initiating a panic sell-off. This surge in involuntary supply doubling in Cape Coral. High listings in Lakeland overwhelms buyer demand, ensuring listings sit for months and forcing deep, continuous price cuts across the metro areas. The conclusion and call to action. The financial reckoning in Florida is absolute. The journey through these 10 cities confirms that the crisis is structural, driven by unsustainable speculative growth and crushing external costs. The average price drops, the extreme inventory surges, and the systemic failure of affordability across these markets, from the financial disaster of Cape Coral to the luxury unraveling of Miami, are creating a new financial reality. If you are thinking about buying, you cannot rely on past price charts or sales slogans. You must calculate the total cost of ownership, the soaring insurance premiums, the long-term climate risk, the property tax trajectory, and the viability of the local economy. The time for waiting for the market to gently return to normal is over. The moment for strategic, informed action has arrived. Do your homework. Run the insurance quotes first. Seize the discount. Own the future.